Georgia Barkell, thank you for coming and joining us at Bentleys today. For those that don't know you or Sprint VC, you're a managing partner there. Tell us about a bit about Sprint VC, a bit about yourself, and your involvement in innovation in business.
Thanks, Andrew. Thank you for having me. It's a pleasure to be here. So, as you said, I'm the managing partner of Sprint Ventures. We are a Brisbane-based venture capital fund. We invest across Australia, but we're proudly Queensland focused as well. We have a significant portion of our portfolio in Queensland. And at Sprint, our investment mandate is to invest in early stage companies, technology companies, and in the industries of AI, health tech, and climate and infrastructure tech. So we're in the impact investing space.
Sure.
And I'm very proud to announce that our involvement in Queensland has been recognised through my government appointment on the Queensland Innovation Advisory Council.
Congratulations.
Thank
That's
you.
Fantastic.
Thank you. And I'm working with the chief entrepreneur and 11 other members of the council to promote the innovation ecosystem in Queensland, and as an investor, support that with capital.
Brilliant. So talk to me about VC itself. What is it essentially? Talk to me about innovation, why that's important. And then obviously we keep hearing things from government saying we want to invest in innovation, government incentives, tax breaks for doing so. What is it? How does it work?
Okay, so venture capital is investing in very early stage companies. So they might be at the stage where they have an idea, but not even a product, let alone customers.
Sure.
And revenue. So very, very early stage, and everything that you know about companies is different.
Okay.
So venture capital investing and investing in innovation is very important because we want our economy and our country to be innovative. We want to be the leaders in certain areas, and it's very important to continue that growth in the economy.
Sure.
And the government recognises that. So there's a number of different initiatives they have. They have grants that go directly into startups to give them the capital to grow. They also have a special tax status for certain venture capital funds called an early stage venture capital limited partnership, or an ESVCLP.
Gotta love an acronym.
You do. It took me about a year to say that in the right way. And what that does is, generally speaking, based on independent tax advice for every individual, is that you get a tax credit on the capital you put into the fund at the start, and then a CGT benefit at the end when you get returns. So the government recognises investing in innovation is important, and so they offer this tax status to venture capital funds. And then in addition to that, the Queensland government themselves have put a fund together called a Venture Capital Development Fund, or the VCDF, which is managed by the Queensland Investment Corporation, QIC.
Sure.
And the purpose of that fund is to invest capital into the Queensland venture capital industry, which then flows onto the startups and really stimulates that startup ecosystem. And proudly, Sprint Ventures is one of the recipients of capital from the Venture Capital Development Fund. And we went through extensive institutional grade due diligence to receive that capital. So they went through all of our processes and our portfolio, and it's a great sign and a great support from QIC to be investing in Sprint.
Fantastic. Can you talk me through some examples perhaps of businesses that you're involved in, or startups that you're involved in? What's worked, what hasn't worked, and how do you know, and what's the innovation that drives that?
So when you invest through a venture capital fund, we have a portfolio approach to investing. And investing in early stage companies, there is an element of risk. And so when we invest across a portfolio, we know that some of those may not succeed, and some will have some success and some will have great success. So that's the general approach to the portfolio construction of a venture capital fund. I have some examples of great successes in the Australian startup industry. So everyone knows Canva.
Yes.
Everyone knows Atlassian.
Yes.
Amazing success stories within our own portfolio. We have a number of as well. One in particular that I personally love is an aged care company called UMPS Health, which has a device that goes into an elderly person's home and helps monitor them and communicate with them so that people can age in place at home for longer.
Sure, okay.
Yeah, so that's an incredible company. They've secured capital from the Victorian government alongside Sprint and other institutional investors, and they're growing and making a real difference to the world. I think everyone has an elderly person in their life that they love and support, and knowing that they can stay at home and be happier and more comfortable for longer is very powerful.
Yeah, brilliant.
Yeah, but we have had some losses too. So one of our portfolio companies was in the Web3 space, so in blockchain. That's a big investment thesis for some in the venture capital space. And we made an investment in a company that used blockchain to supercharge enterprise customer loyalty programs.
Right.
So instead of getting points or things like that, you can use blockchain technology to really target customer loyalty.
Sure.
Which was very exciting, and there still is a great business model for that. But unfortunately, as they were launching, so was AI coming into the market, and everyone's attention and all of the enterprise budget went towards investing in AI tools. And so they really saw the market drop out from under them. But in this scenario, actually, there was a great outcome because the founders themselves, who were exceptional, in conjunction with their shareholders, including Sprint, decided that the best approach for the company was to wind up. And in actual fact, they returned most of the capital to their investors. So it wasn't a complete loss, and it was a very prudent approach to winding up the company. So, yeah, but they do happen. We do have some losses. It's very early stage investing.
Brilliant. Okay. Well, not brilliant, but Georgia, talk to me about managing risk. Is that the reason you see a fund is important rather than people going to try and do it themselves? How do you go about your due diligence process and manage that risk?
Yeah, that's a really good question. So there's different ways of investing in startups. You can be an angel investor, you can invest through syndicates, you can invest through a fund manager. We believe that investing through a fund is the best approach. As I explained before, you have a portfolio approach to investing, you have diversification across industries, across company sizes, across ownership, that sort of thing that really diversifies the risk of the portfolio. And there's many ways in which we look at de-risking our investments. The first one is our extensive due diligence process. So we have a multi-stage due diligence process. We start with a scan of the company to see if they fit within our mandate, if their market size is big enough, if it's the kind of company that we want to invest in. We get approval from our investment committee to continue or not. We then do a second stage of due diligence called a review, where we dig deeper into the company. We start validating some of their assumptions around market size. We look into the team themselves and the founders.
Sure.
And then after that, if we are continued to interested in investing, we then go into due diligence.
Right.
So this is when we dig even deeper, and we look into all sorts of things like the legal structure of the company, what their shareholders agreement looks like, who's on their cap table, things like that. So we go very, very deep in our due diligence. And for us, when we make an investment decision, it is very well informed. So that's the first stage in which we de-risk our process. We then spend a lot of time with our portfolio companies through the growth of their business, and the fund life cycle is around about 10 years. So we spend many hours weekly, monthly with our portfolio companies in all sorts of aspects of their business in order to help them grow. We don't want to just give them money and then say good luck and see you in 10 years. We want to nurture those assets and really grow them as well. So we have a big focus on providing more than financial capital, and then always have the North Star in mind and what the exit can be. So even at the point of investment, we are thinking about the sell side. And we work with our founders to build a business towards that outcome.
Brilliant.
Because everyone wants value realization.
Correct, yeah. Georgia, talk to me about the future of innovation in Australia. What do you see coming up as very important in the next decade and further out even, and where we're investing our funds, how it'll change the future for us?
So this is really important, always looking ahead. This is something we do in venture capital. It's a long dated asset, so we're always looking 10 plus years ahead. Where are the trends going? Obviously, the first one is artificial intelligence. everyone is exploring how to use that. It's still a very nascent technology, but the opportunities are incredible. We have a number of AI investments already in all sorts of different industries. So that's a big space, and I think Australia can really capitalise on their skills in that space. The federal budget allocated a huge amount, $3 billion plus towards renewable energies, critical minerals and climate change. So that is a huge focus as well. And I think Australia is well positioned to capitalise on that. If anyone spends time in North Queensland, you'll know that the focus in circular economy, climate is a huge one. There's a lot of technology coming out of North Queensland in that space and across Australia. So that's another area we invest in. Part of our impact focus is looking at these global economic opportunities, and we think that investing in impact is where the biggest returns are going to come from.
Okay.
Yeah, so there is a big focus from the government in investing in innovation. One example is PsiQuantum, which was funded by the federal government and the Queensland government, and that is around the area of sovereign risk and geopolitical uncertainty. And Australia is investing in PsiQuantum and other quantum companies because we don't want to be a nation without our own quantum computer. So that's another area of investment over the next 10 years.
Brilliant. Georgia, thank you for your time today. For those that are interested in what you do and the VC world, how do they get in touch and how do they follow you?
Thank you, Andrew. So Sprint Ventures, our website is sprint.vc. My email is georgia@sprint.vc, and I'm also on LinkedIn, so Georgia Barkell on LinkedIn. Feel free to follow me. We always have lots of really great thought-provoking content on LinkedIn.
Brilliant. Thank you.
Thanks, Andrew.